All right, guys, what's going on? Good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks for taking the time to join me this afternoon. I know it's a little later than usual. We usually do it at 5 p.m. Eastern Standard Time. I just got home from Orlando. Had to get something to eat at least, but was working throughout the day. So we were blogging all day long and tweeting all day long. So nothing really changed, even on the road. Um, Bottom right hand corner of your screen, white logo, click on that, turn on notifications, subscribe to our channel, like our videos, make sure you hit that thumbs up button if you like these videos. And of course, you can watch these at any time at your leisure. These are all recorded on YouTube, so by all means, go for it. All right, the Dow closed down 85 points. We're gonna go over the sectors here in a second and show you why the Dow was down while the S&P was up. Nasdaq was up nearly 1%. Kind of a far cry from where we were yesterday, down 4%, but we gained about 1% back. Not exactly popping champagne over here. The S&P up about a quarter point, right above that 4,000 level, right? It seems to be kind of like that magnet line. I was telling the bloggers about that. Let's take a look at equal weight S&P, again, kind of a show of value, down about a quarter point. So we'll talk about what was hit today in terms of the sectors and why that was down. The dollar index up 0.27%. So again, a nice backdrop. The dollar wasn't going crazy. Yields are pulling back. That's good. Bonds are getting bid. I do own some TLT. I'm down on it, obviously. We're still below 3% on a 10-year. That's pretty nice to see. If we can kind of hover around that level, obviously, we did close at that level ahead of CPI tomorrow. That's the inflation reading report, 8:30 in the morning. We'll talk about that tomorrow in the morning note. But I mean, yeah, it's going to be a big report. Think of it as another Fed day, except it's one report. So kind of closer to the GDP days and non-farm payroll days. Take a look at gold today. Gold on the GLD down 0.084%. Silver down 2.4%. Crude oil was down 0.33%. And gasoline futures down 0.79%. So we do have high gas prices still. I believe they hit an all-time high in terms of price, but I don't know if in terms of inflated adjusted price. So again, it just really depends on how you look at it. They're high, obviously, but we should get a little bit of a rollover here as crude oil is now below 100. So commodities are rolling over, guys. It's kind of a tough place to be. Commodities are kind of pricing in a recession, while stocks are pricing in hyperinflation. So stagflation is probably the fear out there. Obviously, kind of the 1980s Jimmy Carter years, late 70s, early 80s, as we were turning around from a recession then. Kind of a similar parallel there, but not even gold to give you a place to hide now. 1837 is great. Don't get me wrong. I still own some gold, but at the end of the day, it hasn't been that kind of hedge for inflation that people have expected. Bitcoin down 1% on the future side, still above, right near 31,000. Ethereum 2318 is where we are there. Take a look at the sectors today. We have technology up 1.38%. So technology did the heavy lifting today. Communication services, that's why the Nasdaq was up. Healthcare, energy, all these guys were up. Real estate, big down. Again, lack of mortgage applications. Who's going to refinance in this high rate environment? If rates stabilize, you should see that go up. But the idea is that the Fed is trying to kill demand, obviously to kill inflation. Just rip off the bandage. Again, that's kind of what we're trying to do here. Faster we bottom, faster we can bounce, right? Basic materials were down. So again, a lot of value names. Defensives, two stocks in particular hit all-time 52-week highs today. General Mills and Kellogg. Even in a high inflation environment, even in possible global war, you still need your cereal, guys. You still need your cereal. So there is some pockets out there. It's not all Tesla, Apple, and Microsoft. There's some really good companies that have done very, very well this year, and have done new highs. Even in this backdrop, there's always a bull market somewhere, like Jim Cramer says, right? Almost. Take a look here at year-to-date performance. I can give you some pockets here. Look at energy, obviously, has gone up. Walmart has done well, 4.5%, outperforming the S&P. Coca-Cola, boring old Coke, right? No growth, up 9%. AbbVie, Bristol Myers, Merck, all up this year. Lockheed Martin kind of helps when you have, war and conflict. Those defense stocks not named Boeing is going to do well, unfortunately. And then you look at Berkshire Hathaway, and that old Warren Buffett doing his thing. And again, his biggest holding is Apple. He hasn't sold any. I believe he bought some more. So that's good to see. I don't know if he bought some more, but I know he is still holding some. I didn't get to read that whole Berkshire report. But that's where we are today in terms of trading. Remember, I talked about this morning. I did have SPY calls. Didn't really hit as much as I thought it would. We got as much as what 13, 15% or something like that. I have to look back. I think it was 15%. So a nice little trade there. Apple calls hit in the morning for a nice 45% gainer. Well done. I did open a trade today with the team. So we'll see what we get moving tomorrow. But it's all hinging at 8:30 tomorrow, guys. That's really what we're hinging on is the CPI report. If it's a little less than expected, something to cheer for. So we really have two forces here. Are the bulls just looking for something to cling on to? Because if the CPI is really hot still, it's going to get ugly. It's going to get ugly in a hurry, actually. So there's a couple of levels to watch here. I want to go ahead and show you guys. I think it's here it is. This is CoiFin. Let's go and expand this. And we're going to go to today's markets. We're going to type in SPY. And again, I think I talked about this yesterday regarding the bear market levels to watch for SPY. And I'm going to go ahead and zoom in here. See, zoom in, not zoom out. There we go. That's too much. So we can see the drawdowns here. Go and scroll here. You can see where we close right around 399 and change. Right here is your bear market level, 380, 280. Might get the job done because that is the same level that we got in terms of a drawdown from 2018, which was a pretty much a Fed kind of driven sell-off. Risk assets were sold off, and we bounced pretty nicely. Could this be the case? Sure, but this would probably be a big inflection point for the bears or possible targets. So 20%. I mean, right now you're kind of hovering right around 17% in terms of drawdown for the year. Not quite a bear market, but a correction. So right now you're pretty much just looking at pockets of market action or pockets of stocks that you wanted to get. Three names that came out of my head immediately were Microsoft, United Health. Those were the two. And then I was looking at Facebook, Meta. It's just that it's so cheap. So again, there is some value there. They actually make money. It's not a company like a SPAC or anything. That's what I'm kind of want to focus on is really good values and obviously companies that do something that can weather the storm. And see the drawdowns from the past, see their numbers. Always good to do some homework. I got to set that up for the investment club. All right, let's go ahead and move this over. I wanted to take a look quickly at the crude chart, and then we'll answer some questions. Again, crude is definitely getting weaker as we hit that peak. 130 seems so short time ago, but you can see here we're still kind of within range on the daily. Again, 94.58 seems like a pretty decent level of support. That's where we bounced from before, just a couple of weeks ago, last month, excuse me. And again, 94.74 on crude. I kind of was expecting maybe 85.90 throughout the summer season, depending of any kind of craziness in the Ukraine or in Europe. But kind of I expect if things are as is in regards to demand, then I think about 85 to 90 isn't bad. I don't mind buying oil stocks here, but I wait for oil to pull back just a little more. The only thing I do worry about with these crude oil companies or these refiners is that are they at their peak? Is this the peak of energy? Is this the peak of crude? Kind of conflict in Europe, and then you also have demand coming back online post-pandemic. I mean, when else are you going to get this kind of demand in terms of crude oil as more countries are going clean or green? That's something to think about if you're thinking as a long-term investor. If you're a value investor, energy is not a bad way to go. They have returned capital to shareholders. They do provide dividends, but it wasn't all sunshine and rainbows just 2 years ago. Remember 3 years ago when oil went negative and ExxonMobil fell out of the sky. So not as simple as just follow the money either. You kind of have to be a little more forward thinking than that in order to make money in this market. Well, we'll move on. All right, let's answer some questions. ETH, if you're talking about Ethereum, let's go and take a look. I'm going to bring up CoinFin again, and I do own Ethereum, so I understand the question. Hopefully, Coinbase, Ethereum. Okay, this is a pretty good chart. Let's go ahead. No biases, no annotations, nothing. So the first thing I do see here, again, if we're going to kind of scroll it out here, my first trend line or first sense of support that I saw was basically right here. That seems like a good spot of any to kind of create a little bit of a support That's 1741. And you can see this is a more expanded out daily chart, years and years. But again, just zooming out, seeing how much it's fallen here. Again, 1741 seems to be like a decent support. Complete washout, but again, nothing new. So if we went ahead and actually went peak to trough there, how much percent would that drawdown be? You could see right even at this level here, you're talking about a 63% drawdown. What would that equal to in terms of recent drawdowns of said Ethereum? We'll go ahead and take a look in terms of percentage change, not price. So let's go back to that price, click once, and for some reason, it does not want to work. Let me get this price button off. There you go. And we're going to do peak to trough. The last time we had this kind of flush or a bear market move drawdown is right here. That was about 61% back to COVID, basically. Basically that's the COVID lows, 61%. We are not there just yet. If we looked at the actual drawdown peak to trough currently, we would be at currently peak to trough 53%. So we're not quite there yet. This seems to be a good level of support, 1741. If I'm a long-term Ethereum investor, that's the target I'm looking for. That'll match your COVID drop that we've had, pretty much the biggest drawdown since. So again, keep that in mind. That's 1741. I'll share this chart with you guys on Twitter so you guys can have a better view of it as we go along. Carlos, what moving averages do you use on Thinkorswim? Simple or exponential? Simple. Simple. That's basically what I use. So let me go and share this table here with Ethereum. I did another one on Bitcoin. If you just go to our Twitter, you go to media, it'll come up, and don't miss it because that's pretty good level to start putting out charts in and levels to buy if you were looking to buy some. And the way I see with crypto, guys, if you need the money, just sell it. You know, it's not a religion. It's an asset, just like anything else. So I wouldn't be married too much into it. I understand the hodl thing and all that. I get it. And I am holding, so don't get me wrong. But you know, if there's some point where you just don't feel comfortable, just go and sell it. I don't think that's anything bad. I know the conventions and everyone says, oh, you know, you're not looking towards the future. Whatever. We'll go and leave it there, guys. Have a great rest of your afternoon. I'll catch you guys tomorrow for the CPI report. Have a great rest of your evening. Cheers.